Are we live? We're live. We are live this morning, coming to you from our home office and recording studios. We can barely contain our excitement for the news that's coming from the Bank of Canada in regards to the overnight interest rate, but we are doing our best to contain it. I'm Vaughan Zawadzki. I'm here, as always, with the leader of the band, Sean Humphries, and we're mortgage people. Well, that's it. Is everybody excited? We have the announcement in 3 minutes. We're going to cue that up live. We're going to have our reactions for everybody and discuss the impact on what we predict to be a 50 basis point rate cut. I got my fingers crossed for 75 basis points. Sean, what about you?
Yeah, I'm going to play it cool. I'm thinking 50 basis points. It feels like Christmas morning though, like what are we opening this morning? Is it going to be a PlayStation 5? I think and then we're going to go for a trip around the world. Like there's a lot of rumors out there with 75 basis points. I'm secretly hoping for the grand prize of like a full 1%.
They did it on the way up, so it's in the realm of possibility. It's not a zero probability chance. I think it probably won't be. I think if you're hoping for a new Nintendo, what you might get today is one of those wooden cups with a ball, and you flip it and you try to catch the ball in the wooden cup.
Those are fun too.
They're great. It's something. It's better staring at the wall.
Yeah, I'm curious. We got some people watching on Instagram and on our channel, social channels here. Feel free to put in the comments what you think the Bank of Canada is going to do. Is it 50 basis points? Are you thinking something crazy? Off the board, no cut. I mean, there's almost zero chance of a no cut in terms of the predictions that we're seeing. But let us know what you're thinking. I'm a full 50, but holding out hope for the magical Christmas morning of a bigger rate cut.
Yeah. Let's go big. We got skin in the game. We want to see the real estate market get fired back up, and it just won't get fired up to the level that we kind of are used to until these rates come down and people can qualify for more.
Okay, we've got some predictions online here. So I've got Dan Collette with a 50 basis point cut, Michael Roy 50 basis points, Bonnie and David 50 basis points, George Nikopoulos 50 as well. It seems like everybody's right into the 50 points. Jeff Vaughan 50 as well.
So people have been reading the headlines.
See what happens.
We're all sitting here waiting for Santa to come down the chimney. But we do have another one in December as well. So if we don't fully get to where we would hoped to be by the end of the year today, then we will likely catch up on whatever we missed out on in December. So Santa,
for sure,
maybe 2 times.
Well, yeah, for sure. So we're about a minute away from the rate announcement here. It does feel like Christmas morning. When did we start opening our presents here? Another 50 basis points. Nobody's going out and saying 75 to 1%. I mean, those will come out after the rate announcement. If it is 75,
I secretly thought about 75. Yeah. Secretly.
That's right. So here's the announcement. The Bank of Canada reduces the policy rate by 50 basis points to 3.75%. Where were we? I guess we were right. 50 basis points seemed like the right way to go with this. So some details about that, and we'll get into what the release says. But just in terms of what's going to happen with your rates, with your payments, we're looking at. So a new policy rate is 3.75%. Your prime rate on your variable rate mortgage, as well as your home equity line of credits, falls to 5.95%. For amortizing mortgage, your payments are going to fall between $26 to $27 for every $100,000 in mortgage money, which is pretty significant.
Sure it is.
If you've got a bigger mortgage, you're talking 100, 150, $250 if you've got $1 million mortgage. Like, those are pretty significant numbers.
Well, considering the prices of everything else in the marketplace right now, definitely relief on the mortgage payment side, or your line of credit interest as well will be affected. So this is really good news. We've been hanging on for a while, and to see the rates come down a little bit more steeply than they have been is a really good sign heading into the end of the year.
Yeah, it'd be interesting to see at our next meeting. Is that another 50 basis points? I think, our predictions at the last meeting was that we would get another 25 in October. We get another 25 in December. What's your prediction? What do you think is going to happen with going forward? Should we expect another 50 in December?
I think it's still going to heavily rely on where inflation numbers are. So we'll have to wait until early next month to see those numbers. If the inflation numbers are continue to sit below the 2%, then yeah, the door is wide open for 50 basis points. I was reading this morning, and it looked like predictions for the end of the year were 3.5% for the overnight rate. So that would suggest the money would be on a 25 basis points cut, but I think it's really going to depend on inflation. And inflation numbers month over month, they're a lagging indicator, right? So most likely next month we're going to see inflation still below 2%. So hopefully that opens the door to another big one. Right now, I guess we just have to wait and see.
Well, I saw two banks also come out this week and say that they expect that the policy rate from yesterday to drop another 225 basis points, indicating that we still have another 175 or 1.75% in rates to fall before we're done getting there. Where a lot of the predictions were it to end up around 2.5, 2.75%, which would be so this is another half to a 0.5% to 0.75% more than what kind of the market was predicting even like a month ago.
I know. Isn't that weird? I don't know anybody on this podcast who's been saying from the beginning that they think that the overnight rate is
you were right, Vaughan.
Is going to rest around 2%. But the economists are so timid; they're waiting for indicators, almost like my last statement, which was pretty lame, saying, "Oh, let's wait for inflation, or let's wait for the inflation numbers to come out." And that's what they're doing. They're playing it safe. When I made this prediction early on, I just looked at the history. Because every time we've had big rate jumps and big rate decreases, it's been around different events, right? Like the 2018 housing market crash, and which was like a black swan event. Then we had the COVID pandemic, another black swan event. You can't really predict these things. But when they come around, we see drastic swings in the interest rates in order to either cool down or stimulate the economy. One thing I'm interested in following now that we make a big rate cut is what's the U.S. Fed going to do? I predict that they're going to make a bigger rate cut as well, and then we're going to see bond yields fall as well because the economy's looking like it needs some help. So we should see fixed rates come down as well in the next sort of 6 weeks.
Well, I mean, that's not necessarily that's not necessarily what the bond market's been doing this week. This week alone, bond yields have gone up 11 basis points, which is a direct reflection of what fixed rates might do. And well, why is that? People are thinking, well, the Bank of Canada is going to move the interest rate. A lot of people expect that interest rates will fall. The fixed interest rates will fall alongside variable interest rates, but they're not directly tied.
No, they're
the U.S.
not.
economy is still going really strong, and there's a chance that Donald Trump gets reelected in November, and I think we're 2 weeks away or something like that. And so with that comes higher inflation and more money and higher prices. And so that's what the market is afraid of. And that's why we're
Mm.
seeing this opposite effect that's coming in with our fixed rates, which, just this week, the last 5 days, 11 basis points higher. And I don't expect the Bank of Canada rate decision to drop these yields since we're so tied to the US economy when it comes to our fixed rates.
Yeah, we'll see. I mean, I would predict the US to continue to cut. And if they continue to cut, then we should see that movement. But you're right. The fixed rates have creeped up, a tiny bit. In such a rate sensitive environment, 11 basis points can make or break a mortgage contract, right?
Yeah. Well, the current prediction for the November 7th Federal Reserve meeting in the US is a 91% chance of a 25 basis point cut, and no change. There's a 9% cut. So they're not really even talking about even as much as 50 basis points
Nothing
right
aggressive.
now.
Yeah, well, that will definitely have an impact on, what we hope to see fixed rates come down. That looks like it's not so likely.
Yeah. Yeah. I don't think we're going to see the same drop off. If anybody's hoping, going to call their mortgage broker or their lender today and say, well, rates went down. What's my new fixed rate? Fixed rates are not in the same realm as what the variable rates are going to do.
Yeah, that seems to move a lot slower, and it's not the Bank of Canada or the U.S. Fed that has their hand on that lever.
So, what do you think? What will happen with the real estate market?
I was so optimistic about the real estate market rebounding. We still have a ways to go. I mean, once we're down at 2%, then I think that we're just flying again. But that's sort of a prediction for the end of 2025. If we can get another 50 basis points here in December, rather, and then early next year, then we could see an early spring market. And we've seen it over the last few years where February has replaced March and April in terms of activity. I think we could see that again this February. Right now, there's still a record number of listings on the market, but things aren't moving because of affordability. We have new mortgage rules December 15th that are going to help first-time homebuyers move. So there's going to be a window there, I believe, similarly to the window when things were on the way down, where properties may have been had to move because somebody made a purchase and they needed to sell their home. They needed to reduce the price. I think we may see a similar sized window on the way back up for first-time home buyers when the new rules come into effect. There may be a lot of properties listed on the market that are priced reasonably that now those first-time home buyers can go at. Maybe they're in the 1.1, $1.2 million range. So we'll see activity there. That may kick a little bit of that FOMO that you love so much into high gear. So we'll see. I think that there's an opportunity there. Certainly, when the dust settles early January, mid-January, and people sort of shake off their Christmas hangovers and start getting their mortgage applications updated, I think that we could potentially see a really good February start to the year.
Well, I think we'll have I think we're going to have the best Q1 since 2021, which is, the golden era of the last decade or so. Of 2021 was so active. Anecdotally, I'm feeling it in terms of people talking to me and reaching out and asking me about the rule changes. What do they qualify for now? Should they wait for the rule changes? Does it make sense to jump the market? If anybody's thinking, well, maybe I'll wait for lower rates. Well, everybody's waiting for lower rates. Everybody's waiting for the rule changes. You're going to pay more in January than you would today with lower, even though you're going to pay less interest on it. That's going to be on a higher mortgage amount because you're going to have to borrow more in order to do that. So in terms of how long it takes you to pay that off, I'm in the boat with what can you make happen now? Are you going to be happy with that as a long-term decision? If not, sure, wait for the rule changes. You're going to qualify for 7% more, roughly 7% more than you do today. So why not, if you can make it happen, beat the rush, get in, find something. There's some great deals on condos right now. Those prices have come down. if you're looking at a
And
condo,
they're not
now's the time.
building more condos, right? So, building is stalled on a lot of new condos. It would be, I mean, I don't know. What's a good time? The good time is when you're ready to make your purchase, right? When you have your finances in order, when you have your budget put together, you've got your pre-approval, your real estate agent is driving you around. That's the time, right? And if you're trying to time the market, we know that this is not a brilliant idea. If you see a great opportunity now, it may not be there tomorrow. So go ahead, make that
Yeah.
investment. Where can prices go in 6 months? Are we talking, for a condo? Are we talking $25,000 more that they're going to be asking? $50,000 more? I don't know. You make the purchase when you're ready. And rates right
Yeah.
now, they're still not great. The variable rate mortgages, because of the discounts, and we talk about the discounts a lot, if you can get a prime minus 1%, I think you're going to be sitting pretty nicely by the end of next year. If the overnight rate is sitting at 2%, then we'll have a 4.2% prime rate, and you take your 1% discount off of that. This is
Yeah,
a
you're cooking.
very, very reasonable, very acceptable. You're going to have a good rate. You're going to have a much lower than if you went with a sort of 3, 4, 5-year fixed right now.
Yeah. Eddie Cochiolo, president of DLC Canada, jumping in saying, great news today. This should help Canadians navigate mortgages in a more confident and sustainable manner. I think he nails it right there when it comes to confidence and how people are feeling. What's going to happen next? Is this a scenario where prices are going to keep going down? There's nothing really to keep prices from going down at this point. It's more confidence essentially in the market, and which, as you mentioned, leads to my underlying factor, which is the fear of missing out. The more people that feel confident, the more people that are in the market, and we will continue to see that prices to go up, and which is when people start buying real estate.
I mean, once it starts to move, it'll move, but the affordability has to move first. We have to get the wheels turning on the affordability, and then of course we will see the market react, and we'll see people clamoring over each other once again to buy property in the hottest real estate market in North America, if not the world.
Well, that's great news. Let's end it there, Vaughan, unless you got any final parting words to say. I think great wrap up there.
No, it was good to see you. It's great to be on, and pretty much as predicted, we have our 50 basis points rate cut. More to come. Affordability will return by early 2025. That's it for me.
Thanks a lot, guys. See you next time.